Hello and welcome to BQ Prime. You're watching IPO Adda, and my company in focus today is KFin Technologies. Uh, People in the capital markets know this company very well because they are the registrar of issues and transfer agents for many of the mutual funds and other capital markets issuers. And joining me is Sreekanth Nadella, MD and CEO. The company is coming out with an IPO, which is primarily offer for sale of 1,500 crores, where the promoter General Atlantic is offloading some of its stake, priced between 347 to 366, giving the company a value of over 6,100 crores at the upper end of the price band. Sreekanth, thank you very much for joining us on BQ Prime. My first question to you is, roughly a year back, you made a placement to Kotak Mahindra Bank at 185.35. And a year later, you almost double the price is what your IPO is priced at. How do you justify this jump in pricing?
Thank you, Sajid. Very good afternoon, and hello to all your viewers. The transaction that has taken place, with Kotak Mahindra Bank a year back, the diligence had started 12 to 15 months prior to that. The transaction obviously concluded, previous year, but based on the financials that put into the previous year. Now, what has happened, of course, over the past 2 to 3 years had been a fair amount of transformation this organization had seen and undergone post General Atlantic's majority acquisition into the company, whether it is in the form of technology transformation, geographical expansion, new asset classes. All of this has, resulted and manifested itself in the financials, which are published in the RHP, which you would see has shown a good growth. 2021, our revenues were close to 490 crores. We have ended the previous year with roughly 640 crores of top line growth. For the period ending September 2022, we have already clocked 350 crores of revenue. So, of course, the bankers, do the price discovery process, through, investor conversations. And the current price, the price band that has been decided is a reflection of the performance as well as the future potential of the entity, which is something that has been recommended.
I get the part of due diligence for Kotak Mahindra, which you said 12 to 15 months, but if I'm not wrong, FY20 you made a loss as well, I think. And I think that would have factored in the pricing which has come in here. Correct me if I am wrong. Is this business like an annuity business for you, or because you get basis points based on the average AUM of mutual funds, and so it comes in every year, or what kind of growth potential this business has?
Thank you. I'll clarify one point about the loss of that year. That was loss pertaining to an accounting, requirement, which required us to recognize deferred taxation, as Ind AS basically does not permit amortization of goodwill, so to speak. Otherwise, the company had been profitable at an operating level for a fair period of time. In terms of our, nature and commercials of the business, you're right. It is largely annuity. 99% of KFin Tech's revenues are annually recurring revenues in nature. Most of my clients have been there with us for the past 15 to 20 years. My client who's been there with us for the longest is over 26 years, so to speak. Right? We charge certain basis points on the assets of our clients. Now, this is applicable for the domestic mutual funds, for the international mutual funds and the private retirement schemes we manage. This is applicable for the alternate investment funds. Other businesses such as share transfer work, mortgage servicing we do for some of the international clients, as well as the value-added services, which are largely through technology, do not follow the commercial model of basis points. They have a different commercial model. If it is share transfer, it is largely folio construct. The number of retail folios multiplied by certain unit price is a commercial associated with that.
How do you see this breakup of your business model? Because currently nearly 64-65% is coming from domestic mutual funds, followed by, if I'm not wrong, revenue from overseas, which is around 11 to 12%, and issuer business, which is around 13 to 14%, which is coming in. Do you see this mix changing in favor of other geographies where you have expanded, especially in the overseas market?
Um, I'd like to believe so, Sajid. We've started our international operations in 2017. At which point in time, of course, the revenues were nil. And since then, KFinTech's revenues in general overall have obviously have grown quite substantially. And on the enhanced and increased revenue base today, our international operations generate close to 15% of our revenue. The disposition and the characterization of the various businesses has been undergoing a change, and it is strongly possible that it will undergo such change in the future, especially in the context that the alternate investment fund as asset class has been steadily on the rise, clocking almost 40-50% CAGR over the past few years and possibly for the foreseeable future. We have recently acquired an entity called Hexagram, with which we now support fund accounting and administration services, which will further help us strengthen our offerings to the international market. Hence, I'm optimistic in terms of the growth that we can orchestrate from international, and which may also change the share of the international solutions in the overall pie itself. Lastly, national pension system and others are the areas where we have recently launched, and in a very short period of time have acquired 5% of the market share. So all of these will definitely change the overall pie itself, plus the share of each of these components into the pie into the foreseeable future.
You are a tech platform solutions provider. As more and more tech integration happens with fund industry or into the capital markets, the cost of technology is also going to get commoditized, and so the pricing is also going to come under hyper competition. Uh, if I'm not wrong, it's around 4 bips, which you charge. Do you see a risk of that going down further as AUMs grow? Because a large part of AUM today is an SIP. We are getting 10 to 12 or 14,000 crores through SIP every month, and it's going to continue growing. So, do you see the pricing power which you have today may shift in favor of the mutual funds, who will ask for much lower cost for RTA?
Sajid, see, diversification is a key theme at KFinTech, right? Not just mutual funds, but alternatives. In the primary and secondary market, being in equities, which pricing is not dependent on the AUM or the basis points. Our mortgage business is also not dependent on the pricing at a basis point level or on the AUM, so to speak. Neither is our technology. So the long and short of it is, we expect the commercials, to evolve over time. Nothing will remain static, for good. That is something that we firmly believe, and hence the need to meaningfully, of course, diversify our businesses and geographies, and even the contractual processes itself. In terms of the basis points, 4 basis points is a blended yield that we generate out of our asset class today. That is a factor of 2 components, which is the asset class mix itself, which means that out of, say, 100 crore of AUM, how much of that is in equity versus debt versus liquid versus passives, and what is the commercial structure against each of these. It is important to note that out of 150 to 200 basis points that typically a fund manager may get in the form of an expense ratio, the RTA fee, as I said, is roughly around 4 basis points. So it is not material enough for anyone to drive significant savings and sizable savings at an asset management level. We believe that this level of commercials help us to create differentiated solutions and offerings and products, which will help the AMCs to penetrate B30s and the rest of the country far faster. Take the asset classes to the much broader set of investors. Truth be told, even today we only have 2.5-3 crores of investors out of 150 crore population. So we believe that the solutions that we are creating will help the industry to expand far faster. So the benefits far outweigh any small reduction that could come in the form of basis points.
Mm-hmm. How do you plan to expand your offerings to other areas within the capital markets. Currently, you are a qualified RTA. Do you think that you would be diversifying into other capital market areas, which will allow you to, expand your offerings, not just to mutual funds, but maybe to brokerages, or for that matter, any other asset class or class of investors?
Thank you again. So today we cover almost every asset class that's out there, Sajid, right? I mean, you want to take a company to go public, right? KFin Tech, runs the maximum number of, main board IPOs. You want all of the secondary, market transactions to be managed. A lot of that work is done by us as a registrar for almost 5,000 companies. In the case of mutual funds, of course, as I've already called out, we are the largest RTA in the country as per Crystal's report. By way of the number of AMCs we support, we manage 300 plus, alternate investment funds out of total 800 plus that exists in the market. We manage the national pension system as a CRA. We also provide private retirement schemes. So practically every asset class, that is out there, KFin Tech, already, has a solution and has a strong presence and a sizable market share. So to that extent, I think we are covering, much of the asset classes. In terms of the type of work itself, right? I mean, the others in terms of depository related work, etc. I think, we have, credible ecosystem partners. We all work together, to make any simple transaction, happen for every common investor. So I think, we believe that, we are present in most of the asset classes that ought to be. Geographical expansion is something that, as I said, we are very keen to be able to take all these asset classes to global.
What about regulatory risk? Because you are heavily regulated by the regulators SEBI and PFRDA in India. You are going into various other zones or countries where the respective regulators will have, a kind of control on you. How do you perceive that risk there?
First of all, I wouldn't call it a risk because we are in regulated environment. We've
Or
been
surveillance, or you can say, control, whatever
sure. See, KFin Tech's been operating in this environment for what now, 37 years now. It's not new to us. And we are extremely grateful to the regulators, one, to have given us a license, two, to have recognized the contribution, that we've been making over the years. We now form part of many of the committees the regulators have, where we no longer just are the executioners of the policy that is created, but are being sought of our views in terms of the policy formulation itself. And that speaks volumes in terms of, I guess, the contribution the registrars in this country have, made to this industry at large. I believe that the regulation, is getting created to provide the structural strength that is required for asset classes, to de-risk the retail investors and to ensure there is utmost transparency in the operation. So all of those really are, in some sense, very important, attributes and modes to our business. Those will require entities like KFin Tech to be there to be able to execute. So I do not look at these items as risks as much as an opportunity for us to further cement our position to be, the marquee investor solutions platform in India.
What about data localization? Because the regulator is now moving towards a framework where data has to be in India, and in many cases, the foreign investors have the data, which has been kept outside India. So, do you see that kind of, risk coming in with respect to how the policy framework changes in India?
I think India has always, already been in that framework, Sajid. India, for all the asset classes we support and for all our clients that we, support and manage today, all of the data is already localized in India. We are governed by SEBI and PFRDA under, a specific provision for being a qualified registrar and transfer agent, and the guidelines are exceptionally clear and precise. The data needs to be domiciled within the country, and the data continues to be, as always had been, to be domiciled in our country. So there is no specific change that we need to embrace at this point in time. But of course, the newer acts such as account aggregation related one or the Data Privacy Act will have further contours in terms of what else do we need to do. But otherwise, as I said, all of the data remains in our data centers, that are operated at a tier 4 level today in India.
The fees that you charge is not linked to the expenses, and that's going to be some kind of concern for the street, because your expenses are going to go on grow up, grow on a continuing basis. Is there a way you can link those expenses to the kind of fees you charge uh, from the industry? I'm asking this because if I look at your H1 EBITDA numbers, the EBITDA margins of around 38%. I'm talking the core EBITDA margins versus 45%, which was there in FY22. So there has been a fall which has happened because of that. So is there a reason why that fall has happened, and is there a way you can, link it to the kind of revenue that you have, since it's more like an annuity business where excess expenses can be passed on to your clients?
Sure. See, I look at business models, I guess probably at the lowest order of granularity would be, a literal pass-through expenditure, which is not obviously commercially progressive. And one of the most progressive commercial models I'd like to believe is, what the intermediary ecosystem, such as the registrars, have adopted in India, which is that of a partnering approach, which effectively means that if my client grows, I grow with them. If they do not grow for any reason, I also do not grow with them. Now, it provides that opportunity and the incentivization for entities such as ourselves, not to have a defensive play, which is to just protect my cost, but to demonstrate the behaviors and deliver solutions which helps my clients grow. And that, I believe, had been the cornerstone of this industry, where both the registrars in the country, CAMS and us, have been continually bringing in innovation to the industry, helping our clients grow. And our clients are growing by way of bringing in a lot more investors and intermediaries into the ecosystem. And this, I believe, is probably one of the most progressive commercial models that is around. Right. And yes, in H1 or any, even when COVID hit us, for example, when the stock markets have, come down by half, you would have seen there was a reduction in terms of the revenue, because as the AUM drops, so does our revenue. But we may not see a corresponding drop in expenditure that quickly, at least. Right. So this is going to be the nature of this business broadly. Typically, H1 and H2, if you see for a financial services, company, revenues are usually backloaded into, historically, at least if I see the last 3 years, into H2. And without a doubt, we have seen wage expansion, especially in the technology side. We haven't been immune to, as had been the case with, the rest of the companies in India or even globally for that matter. But it is a one-time reset is what I'd like to believe. We have already seen cooling off in terms of the, wage expansion. And probably that may normalize the margins, but that such resets every once in X number of years does take place, and hence it is ever more important for us to drive more automation, right, and not have a huge dependency on manpower.
So what is the kind of expenditure or capex that you have on an annual basis on automation, bringing in more technology, ensuring that you can bring down some bit of cost and bring in efficiency in your operations?
Sure. So KFin Tech had been, at the forefront of investments ever since, especially since General Atlantic, had invested controlling stake in our company. We have increased our, IT expenditure from roughly 47, 48 crores in 2020 to 130 plus crores in 2021. Already for the half year ending September, we have incurred about 75 crores on the technology side. A component of that spend is towards re-architecting our core platform. A component of that is towards driving further RPA and automation, both of which, the second aspect will drive near-term and immediate, optimization of cost. Re-architecting of platform, which is obviously there even for, longer-term horizon in terms of the expanded volumes we expect to see in the country, will have a medium to long-term impact on our cost profile. So, to that extent, I think, our investments in the technology had been, quite robust. We have also moved our data centers into a tier 4 data center, one in Hyderabad and redundancy layer with another partner in Bangalore. Even as we architect a much of our application layer to be moved into cloud into the next 6 to 9 months.
Okay. Sreekanth, I wanted to ask you one question, which is a regulatory overhang, which is there and is part of your risk factor as well, which respect to your former promoters. What is the status there, and what kind of impact that you see? Because considering they own 14 odd percent, which is currently frozen by the regulatory agencies, but what could be the impact which you can see now?
Sure. See, all the cases that were there on the ex-promoter, right, are sub judice, first and foremost. On a fully diluted basis, the stake is close to 12%, after dilution. And three, based on all the disclosures we've made, we do not believe there is any material impact on KFin Tech, as none of those cases have any bearing on the organization per se. Since the event that happened with the other company, we have maintained a complete delineation, having delinked any kind of relationship, whether at a management level or at a board level, or even at an operations level as well, right? So that separation is complete and comprehensive. We do not believe there is going to be any bearing on the company on any of those past cases. The rest of the matters, of course, are in sub judice, and I'm sure you would appreciate that I wouldn't be able to comment further.
No, I'm just asking because it's part of the risk factor, so I should ask you that question. Sreekanth, Nadella, thank you for joining us on Weekly Prime. The KFin Tech IPO opens on December 19, price between 347 and 366, 1,500 crores of OFS by General Atlantic, and values the company at 6,133 crores at the upper end of the price band. Thank you for joining us on BQ Prime.
Thank you so much, Sajid.